And so these presumably temporary disruptions aside for Tokyo, what are you watching? Because it does seem like we're in Asia, we're going to be in a meandering kind of mood given the escalated political volatility from the US and also the lack of liquidity from mainland traders.
Yeah, I mean, everything's looking fairly comfortable at the moment. You know, the futures market's indicating that, you know, that when the full unwind happens, well, now that we, you know, things are going to be opening fairly strong. I mean, we've got the ASX up about 78 basis points or so at the moment, in Japan, when that finally does come back online, would have probably seen a slightly positive open, as is the case in Hang Seng, with the Hang Seng future at 1.4% as well. So, yeah, I think things are looking okay. And of course, we've got our eyes on, you know, the stimulus negotiations which are taking place in the US and the likelihood for that. I still think they're probably sort of 50-50 whether that would pass the Senate. But, you know, all the right noises it seems to be making, and they're at least they're at the table, and the market's feeling quite consolidated by that.
So, of course, when it comes to the US dollar, horrible quarter, likely to be, you know, a bumpier ride going ahead. Do you expect further weakness? And I suppose the more important question is, how does that then translate into where Asian and emerging market assets go from here?
Well, it's about the reflation trade. I mean, we've seen obviously glimpses of, you know, we've seen it's been one of the big thematics through Q3, the idea that we've seen break-evens higher and real yields moving lower, and that's weakened the dollar. That's benefited a lot of the reflation commodity assets as well. You know, and I think if once we get November 3rd out the way, and we get an accepted election, that will happen at some stage, I'm sure. Then we can finally look at the makeup, and if you look at the way this is all shaping up, you know, this is not my political view, but it's looking very, very likely that Biden's going to take the White House. The question is, will the Senate go down towards the Republican side, or will it go towards the Democrats? That's where I think the Republican senators now are just desperate to save the Senate. But if we do get the blue wave, I think, you know, you could get a bit of uncertainty on the day. But I think after a period of time, once everyone realises this is all about deficit spending, we're going to see break-even inflation expectations moving higher, real yields on fives moving down towards sort of negative 2% over time. And I think that's going to, therefore, you know, that correlation with the dollar is going to continue. I think the dollar continues to weaken as people then push back onto that reflation trade, and the idea of the monetary policy is there to benefit fiscal. And I think that's really where we're going to be continuing to trade that.
What does all of that do to the Japanese yen? This GTV chart on the Bloomberg showing that the yen just had its best quarter in a year or so, and we've seen this appreciation trend since around July.
Yeah, I mean, I think, you know, as an election hedge, I mean, everyone's been sort of buying volatility in S&P options right throughout sort of into December, into January. The implied vol that you see in S&P term premium is obviously significant. It's far more elevated as you go through there. Everyone's sort of positioned for a contested election, and that makes the Japanese yen still a very attractive way of hedging this, not just for optionality for equity, but being long the Japanese yen in that situation. But as I say there, I mean, this is all about relative growth. It's all about relative yield, real yields, that is. And you can still get a positive real return in the JGB market when you adjust for break even. So that's a really attractive place to be. I mean, if you adjust US Treasuries for hedging costs, you know, again, for Japanese investors, you're getting about 8 or 9 basis points of advantage there. You're still getting a positive return. So I think in that situation, it just suggests that any kind of rallies in dollar yen give me an opportunity to sell for a longer period. Of course, we know that yeah, moves through 104.50 and below down through those figures will be met by more and more dialogue from the Bank of Japan. But as long as they've got positive real yields relative to what we're going to see in the US if we do see a blue sweep, then for me, then the argument is how low does dollar yen go and what can they do about it?